What if I told you that a huge catalyst for this stock is happening next week, but the market is not paying attention?
I would call it transformational, and I don't think that's sensationalistic.
I agree with Jesse. It will be a transformational moment for our company.
This catalyst is so transformational that even Jimmy Butler, the NBA player, is a big shareholder.
The world knows that's my dog.
But it gets even better. Your downside is somewhat protected because one of the company's assets is worth double the current market cap.
You know, we're trading at roughly 20 to 22 odd million dollars at any given time these days. And we recently did get a professional evaluation done, and it came in at roughly $40 million.
My name is Mariusz Konieczny, and I've been investing in the stock market full-time for 16 years. I'm also the author of 11 books on investing and the founder of microcapexplosions.com. Because of what is happening next week, the stock of LEEF Brands has a good chance of delivering incredible investment returns over the next 12 to 24 months. However, the last 4 years have been extremely painful for investors as the stock price of LEEF Brands declined significantly. In the stock market, you either grow fast or you better be profitable. LEEF Brands didn't do either one. As you can see, 2022 revenues were approximately $30 million. 2023 revenues were also $30 million. And 2024 revenues are on track to be also $30 million. And on top of this, the company is not even profitable. That's a recipe for a stock market disaster, which is exactly why the stock price declined so much to a point that now the market cap is half as much as the value of just one of its assets.
You know, we're trading at roughly 22 odd million dollars at any given time these days. And we recently did get a professional evaluation done, and it came in at roughly $40 million. Trade at 20 million, we have a $40 million piece of real estate. And so investors are coming in at a severe discount to that today.
The reason why next week catalyst is so important is because it will finally allow LEEF Brands to grow revenues and even turn profitable. Then the stock price will have a chance to soar the same way as the stock price of its competitor soared. The stock of Grown Rock International went up 10x in 24 months because of revenue growth and profitability. What's the catalyst? Well, this is the catalyst. This is the transformational event.
This is our 1,900-acre trophy ranch that will soon become one of, if not the largest cannabis farms in the world.
This is the asset that was just appraised for $40 million, which is a double from the current market cap. Next week, LEEF Brands is planting this farm, and this farm will completely transform the business.
I would call it transformational, and I don't think that's sensationalistic.
I agree with Jesse. It will be a transformational moment for our company.
This is such a big deal that even this guy, Jesse Redmond, used to be an equity analyst, and in January 2025, he joined LEEF Brands full-time as the head of investor relations and business development. In order for you to understand why this farm is so transformational to LEEF Brands, we have to talk about the business. And if you like the video so far, I urge you to subscribe to this channel, click on the notification button, like the video. This helps out the channel a lot. LEEF Brands is a cannabis company from California that derives the majority of its revenues from selling extracts to the biggest brands in California. The cannabis business is divided into the flower side and the extract side. LEEF Brands operates on the extract side. The company takes the flower and runs it through its extraction facilities to produce products that look like this. They are the ingredients that the clients infuse to make the finished products such as gummies, creams, vape pens, or drinks. LEEF Brands has 3 types of extraction lines: ethanol, solventless, and hydrocarbon. These guys are the absolute experts in the extraction business.
but they've also spent, over a decade becoming experts at extraction. We toured the facility, we documented, what we saw there in our reports. And it's not just the fact that they have the fanciest machines, the latest and greatest technology, but it's the people behind it. They have experts in extraction that are the best that I've met in the business.
Up to this point, the company was buying the flower from 300 different farms to feed the extraction lines. This made it impossible to generate good enough margins in order to grow revenues and be profitable. As you can see, gross profit margins were in the neighborhood of 30% during the last 3 years. To solve this problem, LEEF Brands acquired its own farm to be able to grow its own flower at a lower cost.
We found the farm through kind of friends. It was a pocket listing. And I'd looked at a whole bunch of other ones that were already licensed. They were super expensive, $20 million, $30 million, $40 million for these different farms. We found this one. It was much larger than a lot of the other farms we were looking at, but it wasn't licensed yet.
They put millions of dollars into it. They licensed it. They got the necessary permits for it. And next week, they are planting it.
We should be planting next week.
With this farm, LEEF will be able to significantly reduce the cost of the flower from $20 to $40 per pound to $6 to $12 per pound.
So we'll be growing at $6 to $12 versus, kind of broadly speaking, currently paying 20 to 40-ish, depending on the extraction line.
Yep. Yeah.
This will obviously improve the gross profit margins.
We're going to start to see the margin impact of the spring harvest in the summer.
LEEF will also be able to improve the extraction yield by growing specific types of flower that perform the best through the extraction facilities. Currently, this is not possible by buying from 300 different farms. LEEF will be able to save hundreds of thousands of dollars on testing.
Testing. We spend anywhere from $50,000 to $80,000 a month on testing costs. And we have to do that because we source from so many different farms. That's the only way that we can ensure that the product is pesticide free. But once it comes from our own material and we do the front end testing on it, and we know that we're the ones that cultivated it, we know what's in this material.
It's $1 million of savings.
Totally. Add all to the bottom line.
Also, with its own farm, LEEF Brands will finally be able to grow revenues.
We're roughly a $30 million company today. With the farm coming online, I think that we have a double in front of us. I think that we can go from 30 million to a $60 million company, a revenue rate without any sort of M&A. That's just organic growth.
Now that we understand how the farm will transform the business in terms of margins, yield, profitability, and revenue growth, let's estimate the upside. The CEO just told us that he thinks that there is a double in front of us, so 60 million of revenues. Because LEEF Brands will be considered a profitable growth stock, we should apply a revenue multiple of 4. That's 240 million or 10x from the current stock price. Now, that's just California. LEEF Brands is also expanding into other states, which means more revenue growth beyond the $60 million. In February, the company signed a binding letter of intent to enter New York. Some of their California clients are already in New York, so LEEF Brands already has a clientele in New York.
Some of these other markets can be as big as California, especially some of the East Coast markets. So I think that, what took us $20 million in investment to create in California, I think that we could do for even sub $5 million. Because of what we know now, the learning curve, we spent close to a decade refining the processes. And so I think that we could recreate the same thing with less money, if that makes sense. The size of these other markets are very big, and the price point of where the products sell for in these other markets is a lot higher than California. California is this massive market, but we're also, from a value standpoint, we're a low-tiered price point state.
One of the reasons why the stock of LEEF Brands has so much upside and such a limited downside is because of investors' hate towards the cannabis stocks. They are literally giving these stocks away. The industry's most followed ETF, MSOS, is down 95% 5%. This is because most of the industry's players need cannabis reform or legalization to survive, and investors pretty much gave up on any hope of this happening anytime soon. However, LEEF Brands is in the same boat as Grown Rock International, meaning that it doesn't need the cannabis reform to be successful. Grown Rock International stock went up 10x without that, and that's because it became profitable and grew revenues without the cannabis reform. Because of the farm, LEEF Brands is on track to do the exact same thing. If the cannabis reform happens and interstate is allowed in the United States, then LEEF Brands will be in an incredible position as the largest extraction company in California. The upside for the stock would be so huge that I am reluctant to even say it on this video. LEEF Brands would be able to produce its products at a cheaper cost than the operators in other states, and it would be also able to sell its products at much higher prices than it is able to do now in California.
The laws were to ever change and we can start shipping out of California, I mean, that would be, a beautiful thing for us. It'd be, amazing. We would definitely be in a position to where you're going to have a hard time producing these products cheaper than we can do it in California. So shipping into states that don't have the big outdoor agricultural footprints the way that California does, that's definitely something that we hope happens. We're looking forward to it. We're not necessarily hanging our hat on that to where that has to happen in order for us to be successful. But if it does, it would be a win.
Look, the bottom line is this. The stock of LEEF Brands is selling for half of the value of its farm. So there's a lot of margin of safety. The farm is being planted next week.
Stay tuned. Please stay tuned. We got something special coming.
It will completely transform the business in a way that it will improve margins, yield, profitability, and revenue growth. The upside for the stock is big without any cannabis reform. But with the cannabis reform, the upside is just absurd. With that being said, thank you for watching.